Hello again. So I didn't get as far as I wanted to in the previous video about these chart patterns and such like. So let's have a quick look at how the pattern itself, combined with the histogram here, or RSI histo alert, can keep you from getting into bad trades. Bearing in mind also that you don't want to be trading when the markets are flat, you know, between the Asian session and the Frankfurt Open and stuff like that, or the close of the American session and the open of the Asian session. They can be traded, but you know, those are the obvious areas that you don't want to be considering, especially scalping trading. But let's clear these lines off and start with a totally fresh clean chart. So let's go for a higher time frame daily, and let's just find a random swing here. So price is coming down, and in order for a 2B reversal to be validated, what I did, I don't trade 2Bs on their own now, but you can't fail to see them. And you know, what we're looking for is this pattern here: swing 1, swing 2, swing 3, and then the break and continuation. That's the one we looked at earlier, I think. So let's go and find a load more. So yeah, let's find another swing down without a gap, preferably without a great big spike, preferably. This looks interesting, this one here. So this is, let's just start with this one here. We could start here, but that one's actually a valid reversal to the long side. You see the you know, you've got the low, higher low, lower low, higher low, lower low, and so on and so forth. But this is a tidier example to look at, because I want one that's not worked, because this clearly has hit the target somewhere. So as the price is coming down, you just keep following it down with your horizontal line, and you wait for a situation like that, where that's the low, that's the poke bar, or yeah, it is the poke bar, trigger bar. I can never remember what Sporandio called it, but whatever. The price has to pull up above there in order to consider going long. And in addition, this needs to be breaking through the 20. So you can clearly see, you keep drawing your line and you wait for a breakdown, and then you wait for a potential breakup, which is your trade. You keep drawing your line, you wait for a breakdown, you wait for a, and we're talking about swings here, not candles. This is a swing down, this is a potential break up here. So this is the third swing, this is your important, this is the final swing to your 2B. So because we're working from left to right, all we can see is that this is a potential target, because that's swing 1, that's swing 2, which gives us our proper, what we call poke bar, or entry bar, should I say. And I hope you're following me. The high of that red candle there, which is just about there, when the price breaks through that, you can consider longs. That's what Sporandio did. What I added to the mix was the price must close through it. So it clearly didn't close through it. And then recently, as I said to you, I've added the histogram, 3 months or so, maybe less, and that would have to be above 0, breaking through the 20, and I want to see quite a lot of momentum, in other words, green bars up here. Something looking like this did. And it's no surprise that that one actually ended up with a target hit scenario here. Look, there's the high, that's the target for that potential 2B. It's not the clearest 2B pattern in the world, I agree, but 2B pattern, some people count the bars, I don't. you know, and it's not necessary. And when I started out on this, I did. Sporandio had a picture. If you look it up, you'll find it online, and it sort of had 3 bars here, pull back and continuation, and I was waiting for 3 bars and all that lot. It's not necessary anymore. So this didn't do anything. It didn't go north, the break of that red bar underneath the crosshairs here. And we carry on down, and now we've got a new swing 1. We can call the whole of that swing 1 now. We've got the swing 2, and then we've got the break, a candle break of that low here, which is this candle here. Hope you're following it. I'm doing it differently with the crosshairs as opposed to drawing lines on here. Saves time. Now, the break of the high of that bar would have been Sporandio's entry. It didn't happen, so we've been saved from getting into another long trade. Also, no way was this going to give us an entry. So we carry on down, and we've got a new potential here. The break of the high of this bar, which is the one that broke the low there, would be your potential entry, and once again nothing. So we carry on down, we've got another swing. Let's get the crosshairs back on this. Swing 1, swing 2, and the break of that low there would be the poke bar, which is that red one there. Might just be the green one. No, it is the red one. That's the one that went through. So a break of the high of that red bar there would have been the consideration to go long. RSI is keeping us safe again, and that's how 2Bs stop you getting into long trades when you shouldn't. And you carry on down. We've got another swing here. We've got a break above that, or break through it rather, should I say, which is your trigger bar, which will be either this green or red one here, and break above would be your entry. Finally, we get all the way down here, do it again, no break up, so we do the next low. This is slightly lower than that low by the looks of it, and this is the last low here now. You can see that clearly. So I'm talking about this thing here. There. We will put a low on the low there now. I mean, admittedly, you're probably saying to yourself, well, you can see what's going on now, so on the right hand side of the chart. But you know, go back and watch what I did on here, and at no point did we have a valid reversal to the long side. So yeah, we can call that high there to that low there, swing 1, swing 2. It did go slightly lower. I'll zoom in. Yep, there's the low there, swing 3. So the high of that candle there, swing 1, swing 2, swing 3. That candle, you'd really want a bigger candle for this to be a valid 2B, but just for the sake of this random choice of chart area, we'll call that the poke or trigger bar. So the high of that bar is where we want to close above to consider entering the trade. That's the close above it. That's where we want to consider entering. And now we can apply our knowledge of this RSI histogram, and we can clearly see now that the break above the 20 is the safest entry, because all the momentum to the short side has gone. Bearing in mind this is a daily chart, and look what has happened. Massive move. And you can, we're not trading the daily time for 198 pips, 200 pips. We can use the lower time frames to enter. But when you find these, you can't unlearn this stuff. It's everywhere. All of these will be 2B reversals potentially on the lower time frames. There's clearly one here. And I won't go on much longer with this video because I don't want it to fail to save. But if I go down one time frame at a time, This is actually a 1, 2, 3 reversal here. Look up Vic Sperandio's 1, 2, 3. They often look like cup and handles. Swing 1, swing 2, swing 3. He trades the break of this level here, and you can clearly see the price just didn't look back. And if you apply that, look where the entry is. Hardly any drawdown. The trader's nemesis, drawdown. It'll force you to close trades all the time when you shouldn't. But here's the 2B part of it. Swing 1. Swing 2. So that's the breakout candle for swing for the 2B. Swing 3. The low swing 1 gets broken by a candle. There it is there. The breakthrough of that candle to the long side is your entry. So anything over here, and then you just use your RSI histogram to enter the trade, or you can use a 2B reversal on this part of the trade. That will be a 2B reversal inside there. And then critically, my final take on this was the 3 candle reversal down here. High, low, lower high, lower low, low, high, higher low, higher high, and it must close above there, which is that candle there, and then it will reverse. And I don't want to overcomplicate this, but you need to go and watch my other videos. 2B reversals taught me the importance of pure candlestick analysis as opposed to swing analysis. But hopefully you can see the importance, how 2B reversals, or that sort of style of swing analysis, keeps you from getting into trades early and dangerous. And then add to that the RSI breaking through the 20. Whoever invented this, created it, was, in my opinion, a god. And you know, at no point would you have considered entering based on this H4 chart at the moment until the 2B rules, Vic Sperandeo, and the rules of momentum got you into the trade without looking back. So that's part 2, and hopefully it's given you some food for thought. You can just trade this bare, nothing else, no moving averages, no stinky kinky other stuff that I can throw on the chart, or no moving average crossovers. All you need is 2 things, candlestick, with 3 things: support and resistance levels, candlesticks, and the RSI histo. Have a great Sunday, guys. Thank you for watching.